I'm about to buy TQQQ and NVHE and add them to my $10,000 ETF challenge where I already invested almost $1,000 across MSTY, PLTE, SDAY, QDAY, and TSLY to see which one deserves a $10,000 allocation in my main 100K portfolio. So let's do that right now, really quick using the Moomoo trading platform. Okay, so the reason why I bought TQQQ, which doesn't really pay dividends, is because Professor Harry Vidalker, the financial professor with a $2.1 million portfolio, explained on my podcast how he buys TQQ when it drops by 50%, then sells on the bounce back, essentially treating it like buying a lottery ticket, but with calculated risk. And for those who don't know, TQQQ is a 3 times leveraged ETF that tracks the NASDAQ 100. This means when the NASDAQ goes up 1%, TQQQ goes up roughly 3%. When the NASDAQ drops 1%, TQQQ drops roughly 3%. Is designed to amplify daily movements of tech-heavy NASDAQ stocks like Apple, Microsoft, NVIDIA, and Tesla. So today I'm going to break down exactly how this strategy works, why it makes sense for leveraged ETFs like TQQQ. And now Harry uses the US listed TQQQ from ProShares, but I bought the Canadian listed TQQQ from Global X Investments instead. The only thing is I bought it at market price today. So I'm not buying on a dip, but I want to add one share to the test to track its performance going forward. And then I'll buy dips moving forward using this account. All right, so let me explain Professor Harry's approach with leveraged ETFs like TQQQ because it's beautifully simple yet strategic. Harry waits for TQQQ to drop by approximately 50% from the recent highs, and he puts in a lump sum investment, usually around $1,000. And the key insight is that TQQQ, being a 3 times leveraged NASDAQ ETF, can experience dramatic drawdowns during market stress, sometimes dropping 50% or more when the underlying NASDAQ drops just 15 to 20%. Now, when TQQQ drops 50%, you're often buying at a point where fear and volatility are at their peak. This creates massive opportunity because TQQQ 3 times leverage works both ways. It amplifies losses on the way down, but it also amplifies gains on the recovery. TQQ tracks the NASDAQ 100 with 3 times daily leverage, which means it's well suited for this strategy because tech stocks are notorious for dramatic swings. During market corrections, if NASDAQ drops 20%, TQQ can drop 50 to 60% due to the leverage and volatility decay. Here's the brilliant part of Harry's approach. He doesn't hold forever. Once the position bounces back and he has a reasonable profit, often when it recovers 30 to 50% from the bottom, he takes his original capital out and lets the profits ride. So this means his cost basis essentially becomes zero on the remaining shares. So even if they drop again, he's only risking profits, not his original capital. It's a disciplined approach that captures volatility while maintaining downside risk. And also really quick, make sure to check out the Moomoo trading platform. This platform has been super easy to use for this test. And right now they have a limited time offer for anyone who uses my link in the description and first pinned comment below. All right, now this strategy works well with TQQQ because the 3 times leverage amplifies both the downside during the crashes and the upside during the recoveries. And unlike traditional investing where you hold for years, TQQQ is designed for short-term directional bets. Harry's strategy aligns perfectly with this by treating it as a tactical volatility play rather than a long-term investment. So here's my implementation plan. So you just watched me purchase TQQQ, making this a 7 ETF experiment now. And like I mentioned before, I'm buying TQQQ at current market prices, which means I'm not getting the 50% discount that Harry's strategy targets. This is more of a baseline purchase to start tracking the ETF's performance and behavior. But going forward, I'll be watching for significant dips in TQQQ where I could implement Harry's lump sum strategy during market stress periods. And when the dip happens, I'll be purchasing shares with whatever cash is available in this account. And the goal isn't to bet everything on one drop, but to systematically capture volatility over time. So now I track dividend payments from 6 ETFs and also the dip buying strategy using TQQQ with this Moomoo account. I'll just keep using Moomoo for all these tests since the platform makes it really easy to track all these positions in one place, and I'll monitor their performance in real time. So with this purchase, this has gone from a 6 to 7 ETF test now, including S-Day, the Hamilton Enhanced US Covered Call, Q-Day, the Hamilton Enhanced Technology Covered Call, TSLY, Harvest Tesla Enhanced Income, PLTE, Harvest Palantir Enhanced Income, MSTY, Harvest MicroStrategy Enhanced Income, and now TQQQ from Global X Investments and NVHE. This gives me exposure to both Hamilton's daily option strategy and Harvest single stock approach, plus TQQQ's leverage tech exposure for tactical volatility plays. But now I need to discuss the risk and considerations with this strategy. While Harry's strategy targets volatility for profit, it's important to understand that TQQQ suffers from volatility decay over time. This means that even if NASDAQ returns to previous levels, TQQQ might not fully recover due to the compounding effects of daily rebalancing, and the 3 times leverage means TQQQ can experience extreme losses very, very quickly. A 50% drop could become a 70% drop before any recovery begins. You need to be prepared for total loss of any money invested in this strategy. Also, unlike covered call ETFs that generate income while you wait, TQQQ doesn't pay dividends. Your only return comes from price appreciation, which means timing becomes critical for success. Plus, money deployed in this strategy is money not invested in other opportunities. You need to be patient and willing to wait for the right setups rather than forcing purchases like the one share that I just did right now. I forced it for this video. And in taxable accounts, like what I'm doing, the buy and sell nature of this strategy could generate taxable events. Harry mentioned doing this in a non-registered account, so tax efficiency is something to consider. But most importantly, Harry emphasized that this is gambling money and no one in their sound mind should do this. And I'm only starting with a few $100s that I was going to allocate for this test anyway, so I definitely consider this semi-disposable income. TQQQ is explicitly not designed for long-term buy and hold investing due to volatility decay. And this strategy requires active management and strict exit discipline. Rather than just talking about theoretical approaches, I want to test real strategies that successful investors actually use. And honestly, this type of testing is really fun for me. Plus, the approach would complement my existing covered call holdings by adding a tactical element. While my main positions focus on consistent income generation, this strategy could enhance returns during volatile periods, and testing this strategy provides valuable content for this channel while potentially improving my investment returns. For me personally, it's a win-win situation where the education benefits both me and the viewers, but I'm starting with small amounts in my experimental account, which lets me understand how this strategy works without risking significant capital from my main portfolio. And here's my updated experiment framework, and I'll continue providing my weekly updates on all 7 ETFs, but now I'll be watching TQQ for potential dip buying opportunities that align with Harry's strategy beyond just tracking returns. I also want your feedback on this strategy. Are you interested in seeing more tactical approaches like this? Or do you prefer the set it and forget it income strategies? So for the final time, remember this is experimental money that I'm comfortable losing completely, and I'm documenting everything transparently so we can all learn from the results and so you don't have to spend your money. So let me know in the comments what you think about this strategy and whether you consider implementing something similar in your own portfolio. And remember, if you want to follow along with real-time updates on this test, you can always just download the Moomoo trading platform and add me in that. I update every single day with what I'm buying and selling in that account. Now watch these 2 videos for more investing tips. Bye guys.